Hello, everybody. Welcome to XM Live Trading session in the beginner's room for the risk management course with me. My name is Junaid Vahid, trader analyst and forex instructor. Started trading back in 2011. And here we are with my favorite topic. Like, I like to talk a lot about price action, from different perspectives, because I've been doing debates for price action. I am doing price action for about 14, 15th year already. Price action is what I'm trading. All my strategies are based or coming down to the price action. But what makes money in the financial markets, it's not a price action. It's the best way to trade, in my opinion, for decision taking, generating trade ideas, helps a lot with risk management. Actually, price action method is part of the risk management. Risk management should not be taken as part of price action method. Your trading method is part of risk management. Risk management is the king. If we have to draw a pyramid scheme about what comes first in trading for success, not which decisions you got to take first on how you structureize your process of decision taking, but what's actually the king of what makes money, that's risk management. Risk management. Then the risk management is like this. How did you came across to trading business? If your trading mentality is right, okay? That's the most important thing. Because if you come to the trading business, you open an account expecting become the next trillionaire guy that you saw on the social media, on the Instagram post with Lamborghinis in Dubai and stuff like this. That's a wrong trading mentality, right? Right trading mentality, it's not achieved in the beginning of the trading career from vast majority of the retail traders because of the way they come across with trading business. So if you come across with trading business just to learn financial markets, economics, reading prices, charts, buying assets, relatively cheap price and sell it on a higher possibilities with trading mentality, buying and selling mentality, you are welcome to a very successful trading business. But if you are coming here to buy something and become rich fast, go back again and come got out and come back again with right mentality. Like, I'm sharing it as a joke, but it's really very important for the risk management because it starts from the beginning. Then let's assume that you are coming with right mentality. You are not rushing to become ultra rich. You are not trying to trade 5-minute charts with big lot sizes because you want the money fast. That's why you trade 5-minute charts. If you are trading 1-minute chart, 5-minute chart, 15-minute chart, and I'm asking you, why are you trading this small time frames? And your answer is something like, because I want fast results. Congratulations, you are in the wrong team. Not from my team, okay? And I'm not saying I'm right team, right? Not directly though. So joke aside, looking for fast profits and fast money, big fast results, it's wrong trading mentality. You are not here for anything fast. You just started new business. That's gonna take years. That's New businesses are not hit and run things. If you are opening a new restaurant, are you looking to sell the first soup and then run away with the profits? No, right? So why are you looking for getting one big trade in financial markets and run away? That's the difference. Business mentality and gambling mentality, where the biggest risk is. If you are coming into the financial market, instruments trading, just to make 3-5 hits, first big 3-5 hits, and then you say, then I'm gonna start managing risks, then you will lose everything most probably. And again, when you tell me this, because I have business mentality in trading, or I at least think that I have business mentality in trading, and you tell me that you want to get money fast, big, let me double my account, then I will start managing risks, because I kept hearing this for so many years and people just never learn it. I hear like, please allow me open a restaurant so I sell couple of pizzas and soups so I become rich. Then we're gonna manage restaurants like it's supposed to be managed. How you can become rich with couple of sales? You cannot. Okay, even if you are a real estate agent, like you want to have sell a big mansion for multi-million, like, until you reach there, you know how long-term and strong road you need to go through. It's a big journey until you reach those contacts. You get into in between the people that are looking for this kind of real estate, so you can sell them. You have this very, very great selling skills, finding right person. That's not like we are watching movies and the guy just got and hit a luckily big hit and he became ultra rich, right? You probably agree with me. So trading, it's business. You need to have pre-prepared business plan. In the business plan, you have expenses, you have investments like you're deposited in your account. You might need internet, you might need a new computer, laptop, mobile uh, phone, like maybe iPhone, maybe whatever you are using. Maybe you will need tablet. You have to decide that for yourself. Maybe you will need to pay for some coders to code you some um, indicators, expert advisors for MetaTrader, for CFD trading. If you are coming to CFD, you need to realize what's leverage is, how you can protect your capital, You have stop loss, you have position sizing, you have different things that you need to do. But what's your ultimate goal? To build a strong, long-term business like trading, account where you have expenses. The stop losses are wastes and expenses that you can come from other businesses. You can use the terms from other businesses, wastes or expenses or fees. The stop losses must be that strong. So if in any business, expenses, they hurt. Overall, when you say expenses, they hurt. Like, you know, why would I have expenses? Like, why don't I have only money, profits? Like, nobody likes expenses, but real businessmen love expenses, because expenses as actually what makes your business successful. Expenses are like investments. In one side, you need to pay your internet, you need to pay whatever you have to pay for your business. Okay, you need to pay salary, maybe you need to pay um, um, anything, basically. Cannot find the right word, taxes and stuff like this. These all are, like, simplify them as expenses. Many of the expenses are big needs for the company, so your stop losses are not need. Okay, you don't need stop losses, but your stop losses are actually great because they show you that you are wrong. And you, like, on every stop loss, you have um, two things that's going on: the good thing and the bad thing. If you have the good thing and the bad thing on every stop loss, then you are doing it right, great. You will probably make it. So what are those two things that I can say? When stop loss hits, there is bad thing and there is very good thing. What's the bad thing? You hit stop loss, you lost money. The good thing is that you predefined and you didn't lose more than you can afford. So it's not a loss that you can't afford. Good that you stop losing. Like, let's write it here. Stop loss. Stop loss. In one side, you got a loss. Bad thing, right? In the other side, you stopped your loss. That's a great thing. You could lose even more. Okay, this is two things. If every time when you hit a stop loss, you feel like, yeah, the bad side, but the good side, right? You always have the good side, and you are happy for the good side, and you are, a little bit disappointed from the bad side. Your stop loss is fantastic. Okay, then you are doing things right. Okay, you are not trying to become rich fast. Your exposure is not large, because sometimes people set a stop loss. When they hit it, they sit and start crying. Like, um, in parentheses, of course. Why? Because the stop losses makes no difference. It's only a loss. Okay, the stop loss, it's only a loss. It doesn't have the good part that you stop losing. because of the large position sizing. You exposed so much and you placed a stop loss, but when you got stop loss, it's like you lost your entire account. You lost 50% from your account. That stop loss makes no sense. The stop loss must have always, every single stop loss placement must have two important things that brings to you. Number one, disappointment from stop loss, little disappointment from stop loss. Number two, happiness that you stopped, that you stop losing, that you stop losing. You could lose way bigger, and that's a totally fine. You can take it as fee to try if you are right, right? So you pay little fee, like fees on your any business. Like you need to buy some products in order to prepare the food in the restaurant. So that's something that you have to buy in order to be able to make the food, your menu, based on your menus. The same for trading. Your menu is trading. So you need to put the money to buy the products to see if you were right. The same applies there. Like you buy the product and that product might be never used. There might not be so much demand for that product and it could become a waste. That's your stop loss. But it doesn't hurt because it's some products that are waste and it's not killing your business. The same is for stop loss in trading. If stop loss is killing your business, then you are just not trading, you are gambling. Simple as that. This is another way to think about, to learn about stop losses, because I'm doing those for very long periods of time and people just not taking it seriously. They say, yeah, I know this, I have heard those, I read those on the internet. They always say 1% risk and we should never play, blah, blah. But the interesting part always is market analysis and guessing direction where the price of gold is going to go. That's why you guys or people are losing money in the financial markets, because nobody cares about risk management that much that it requires to care about. So you don't lose money in the financial markets. Yeah, you know a little bit about risk management, but you don't care so much like you do care about the direction of gold and S&P 500 or euro dollar. Direction, it's not important as how important the risk management is. Not even a tiny bit important. And this is really big dilemma, like big paradox. How come that this guy is talking that the direction is not important? How we can trade then if it's not important? The only way I make money is in that I think euro dollar will go up and I buy and it goes up. That's how I make money, right? Theoretically, that's how I make money. So why this guy is telling me that direction doesn't matter? You should think like this, and most probably most of you thinking like this: how to make money if the direction is not important, how we can aim for upside or downside, right? This is probably what is burning, like popping up on your mind. I know that I will not gonna risk more than 1%, but I need to find direction where to put this 1%. That's the ultimate question that people are asking. I say that's so simplified and zoomed in version of risk management that we've been taught for decades or for years. I don't know how long you have been trading, for years, that you need to set an X amount of percentage per trade and go and trade that X amount of percentage trade by trade. Buy trade trading, it's the biggest trap that traders are falling. I hate to say it, guys, because it's getting into the theme of the biggest loss, you've been doing this wrong, the biggest trap in trading, the 5 most important things that you need. All of these things are super annoying and they are all clickbait, like trying to catch your eye and you watch that. But let me tell you like this: the biggest problem with direction catchers, people that are looking only for where the gold price is going to go, the trend is bullish, it's all trend based, your logic of trading, then you are going to be a little bit doomed, but not so much, depends on how disciplined you are. But if your ultimate belief that the trading success comes from direction guessing, probably you are not going to make it. There is high chance you are not going to make it. If you understand the core principles of risk management, what's actually that it's not 1% per trade, or it's not a stop loss placement, then you will understand that risk management is way beyond that. This direction guessing is going to be part of your risk management. Don't make risk management to be part of your direction guessing. This is just wrong direction that most traders are doing. Let me repeat it again.